Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from Jacques Pepin, a famous French chef in the USA, who said, "I tell a student that the most important class you can take is technique. A great chef is first a great technician. If you're a jeweller or a surgeon or a cook, you have to know the trade in your hand. You have to learn the process. You learn it through endless repetition until it belongs to you." We agree with him, as everything in the quote relates to trading the stock market. If you are not a great technician first, then you won't be a great trader. For our main topic tonight, we take a look at the best part of the Australian financial sector, Australian banks, and we'll get into the proposed takeover of Suncorp by ANZ and whether Sun shareholders should support the deal. So stay tuned as Dale and I get into that and plenty more. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Howdy.
Howdy doody-doo, you too.
Are you with me?
I'm with you. I was just thinking about a few things. I'm thinking because we're moving our studio in the next couple of months, so that's exciting.
That is.
I know, so stay tuned for that, everybody. But my brother's coming up on Thursday.
Oh, wow.
He wants to take me shopping on our motorbikes.
Oh, really?
I know, he keeps trying to spend my money.
How do you go shopping on a motorbike? Where do you put all the stuff?
You don't buy big things. It's simple as that.
Keeps it simple, doesn't it?
No, he hasn't been, because winter, it's raining and cold and that, so he's going to come up on his motorbike and we're going to go to motorbike shops, and he's trying to convince me to buy a Harley Davidson, but I keep saying no. Who wants to buy a Harley Davidson?
Yeah, I just had this vision of the Harley taking off and you just flying in the air behind it.
On my backside on the ground. No, I want a better bike than that. No, I don't even need a new bike, but he likes spending my money, my brother. Yeah. He's got plenty of his own, but he wants to spend mine. I think that's how he's got money, because he spends mine. Cool.
That's probably why he's got so much then. Is that what you're saying?
Probably. But anyway, it'd be good fun seeing him and getting out on the motorbikes. Okay. Anyway, let's get back to some sort of thing that's a little bit more serious. But before we do get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask a question, then this is your opportunity to pick up your phone and give us a call now. The number you need to call is 0392909988. That's 0392909988 to get things started. The first person to call into the show right now will get a free copy of my latest book. It's called Accelerate Your Wealth. Don't steal my book. It's called Accelerate Your Wealth. Now, I know Janine is champing at the bit to chat with you, so make sure you pick up the phone right now and get dialing us so she can have a chat with you.
While we wait for you to call, it is the fourth Tuesday in the month, and this means that we take a look at the world currencies. So let's get into the charts. All right, on your screen right now is the world currencies. Is it? I haven't got my glasses on. Weekly or monthly? Or yearly? It is
yearly.
yearly.
Well done.
You were happy about that?
I'm really happy about that because, it's...
What's the point in looking at monthly, is that what you're saying?
Correct. With currencies, what's the point in looking at monthly? So
well, it depends. If you're a short-term trader, you'd want to.
Yeah, but if you're a short-term FX trader, you're making money on high leverage because the amount of percentage that a currency moves is really nothing in a day.
True.
So you have to have high leverage to make money. That's why most FX traders don't make any money.
Right.
Well, actually, the majority actually fail, which is quite interesting. They measure the lifetime, what do you call it? The time trading in FX in weeks, days and weeks, rather than months and years.
So what's something that they could do before we get into this that someone who was looking to trade currencies could do to improve what they're doing?
Actually get a good education and a shit one.
Right.
Most of them get crap. They go to their brokers and look at what the broker websites say, and then they follow that, and no wonder what they lose. Because I don't know about you, but brokers aren't good educators.
Well, the brokers are actually, trading against them, aren't they?
Yeah, absolutely. The market or the people they're trading, they've got accounts where they're trading against them. So no wonder they don't lose. They're set up to failure.
Look, I'm sure the brokers actually want them to stick around and trade for longer rather than short.
No, the brokers work on the one more fool theory.
Really?
There's one more fool going to open an account.
Right.
That's how they work.
Okay.
But can we have a look at the currencies?
Yeah, we did digress a bit, didn't we?
Otherwise, you'll get me on my soapbox, and then we're going to go downhill from there. Okay.
Yeah, I think yours is getting bigger than mine.
That's my head.
The Australian dollar versus the Japanese yen. Okay, that's at the top of the leaderboard, 13.6% up. So we're doing well versus massive. The Japanese currency, aren't we? Okay, which it's good in some respects, but as the currency fluctuations move, that can just really work against the Japanese.
I like it because I want to go to Japan again soon.
Right. Australian dollar, British pound sterling. We're actually up 7.5% there against the British pound sterling, which is lovely.
That's good.
Australian dollar versus the New Zealand, I'm going to jump down here towards the centre of the board, 4.5% up.
Time to go to New Zealand.
So there's been a bit of activity over the year, really, hasn't there? Some nice moves compared to what we've seen in the past. We're seeing the Australian dollar versus the Chinese renminbi yuan. It's 1.6% up for the year, which is neither here nor there, really.
Yep.
Aussie dollar versus the Swiss franc, same, 1.3%, so that's close to that. Aussie dollar versus the Singapore dollar. So this is when we get into the red now, and obviously our currency is actually down relative to the Singapore dollar, minus 1.78%. I don't know if you're thinking about going to Canada.
Yeah, I was talking today about we want to go to, obviously, Japan, but I was talking with my sister-in-law saying, well, let's go to Japan, but we also want to go to Alaska and Canada.
Fabulous. To see Northern Lights, you're going to get up that far?
I'm not going with my sister-in-law, but I'm going with my wife, but she can come along as well.
I'm sure she'll be excited about that when she hears that.
Yeah, Canada, yes, I want to do all that.
Okay, that's really good.
As long as I can ski, I'm happy.
Well, you're going to wait a bit longer then because it's actually down at the moment.
Well, I'm not going tomorrow, that's for sure, so let's keep going.
The Australian dollar versus the Hong Kong dollar, minus 3.65, so we're not seeing much love there. And the Australian dollar versus the US dollar, we're actually down 4%. So this is where the US dollar is really starting to move away, isn't it?
Yeah.
But the Australian dollar versus the Russian ruble.
Everything's down against the Russian ruble.
Yeah, so strong, isn't it?
Because it is.
Yeah, so look, I mean, that's all interesting and well, but why don't we have a look at something that's been in the media of late, which is actually the Indian rupee versus the Australian dollar.
Yep.
Now you can see there it's actually trading quite low, right back to where it was trading in 2012, 2013. Now, unfortunately, the data obviously only goes back to around 2009 when this whole chart was first created. So that's where we've got the data back to September 2009. But you can see that it's considerably down. I'm just going to have a quick look.
Why has it been in the news lately? Because, I mean, we don't have a lot of time, but I'd just give you a brief, short answer.
Yeah, can we see that there on the screen there? It's actually hiding from me, but it's down 25%.
Yep.
It's more about the fact that, you've got this situation with the US having its currency so strong at the moment, and a lot of other currencies have been struggling, including the Indian currency, which you would think would actually be really good for their exports.
Yes, it would be.
However, not the case when you've got the demand and supply constraints that have been occurring around the world. So it's actually worked against them. In a normal situation, perhaps it would have been really great for India.
All right, cool. Well, that's. I remember with India. just wrapping it up. I mean, when I went to India, $100 Australian gave me about 3 walletfuls of cash, and I couldn't put it all in my pocket. But that's it.
I think somebody was having a joke with you then.
No, that wasn't. I was seriously. I couldn't fit all the currency in my wallet.
All right, that is it for our thoughts on the world currencies. Now it's time to get into our first email for the night.
All right, our first email question is from Andy, who says, "Hi Dale and Janine, I bought into DMP or Domino's Pizza this week at $70.80. I have a tendency to buy in too early. A lot of people have that, but I think I might have tuned this entry point correctly. Would you agree? Looks to have plenty of room to head north if it wants to. Thanks for sending in your email, Andy." And we also got the same, we didn't get the same email. We got an email from Angelo, who also sent us in one on Domino's Pizza as well. Now, Angelo hasn't bought Domino's, but is looking to buy. And actually, Angelo's in our course at the moment, he's in Module 3.
Right, fantastic.
But he can talk to us outside of this anyway if he's got more detail. But
okay,
Domino's
wonderful.
Pizza, did he get the entry right?
Domino's is actually, I'm not commenting on that just yet.
All right, I'll shut up. Keep going.
Domino's is actually down around 65% at the moment, as shown on the chart, from the high, the all-time high. Now, we know that prior to going into COVID, let's just have a look back here. In 2020, the stock was trading at around $55. COVID pushed it up, and let's just have a look and see what sort of gains it made. But we're talking about significant gains, 200%. Gain on Domino's Pizza.
Well, everybody stayed at home, so they were ordering pizza by DoorDash and all the others, so they were getting Domino's, weren't they?
They were. So now it's actually being wound back, but it's been wound back all the way almost to where it was.
Okay, so
you would think that, let's think about that for a minute, because you would think that with Domino's having contacted and and
Yes.
being in demand by so many more people than perhaps would have used Domino's previously, that occasionally Domino's is going to be on the minds of people that want a pizza occasionally, and so therefore you'd think demand would go up.
I don't know. I don't eat their pizzas, so I don't know.
Over time. But, we're still seeing the price of Domino's pizza way down from that level. Now, he's talking about the fact that he bought it recently. It's pulled back. I don't think there's an issue at the moment with where he's bought it necessarily.
But you're not saying he's definitely bought it at the right spot.
What is the right spot? I mean, you and I could sit there and say, look, one day we look at it and it's a buy, and the next day it turns around and goes down. We can't control what the market does, and neither can he. I mean, if he's used rules and he's got in there and the stock's had some momentum behind it and he's tested those rules to make sure that they work, then I don't see anything wrong with that. But the market's going to eventually tell you whether that was that, 1 out of 10 times, or maybe 3 out of 10 times that it wasn't going to work.
All right. I'm betting he's done it too early. So anyway, that's my bet. Okay, so one of us will get it right anyway. But we do have a caller on the line, Janine. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
It's Harry from Melbourne. How are you?
Harry from Melbourne. You're the good-looking Harry, aren't you, from Melbourne?
I think so.
You've got a question for us tonight, Harry?
Yeah, I got a question regarding the Flight Centre.
Yep.
Just looking to buy from short to medium term.
Yep.
So just want to know your thoughts about it.
Okay, so you haven't bought it yet, but you're looking to buy short to medium term. Is there any reason why you're looking at Flight Centre to buy?
Actually, I've been following this share from 6-7 months.
Yep.
And I'm looking at a good opportunities in it.
Okay, so have you done any fundamental analysis, any technical analysis or anything else?
Basically, pretty much I was looking at a chart from not recently, from the few years. And again, as it is a Flight Centre, must be doing good with the things in a business. So,
yep. All right, well, Janine's got it up. She's champing at the bit, as I always say. She's champing at the bit to answer your question, Harry. Thanks for your call tonight. Janine.
That's a good description.
What?
Anyway, we'll come back to that description later.
All right.
Flight Centre, we're seeing really not much activity there at all that would justify saying that it looks good at the moment. It's been up, but it's just been so volatile. This is the monthly chart long term. Now, it's trading at levels that it was trading at way back in 2011, even further. So that's the long-term perspective to start with. But I'm glad that he actually said that it was short to medium term, because looking at the way that Flight Centre trades, it is a short-term to medium-term stock generally, but more recently it's been more short-term than anything else.
It is, but no offence to Harry, from what he's looking at, he hasn't really done any analysis, proper analysis to trade short-term on that, has he?
Well, I mean, short to medium term, you want the stock to be moving up, and at the moment it's not confirming that the rise is sustainable. There's nothing there to tell you that, and if anything, there's a potential for it to go down based on what the bar's doing this week. The close is all the way down here at the bottom of the bar. Yeah,
I mean, that's what I was talking about. If you're going to trade short term, you have to have good solid entries. It means you've got to have good solid analysis and rules to get in and to get out if you're trading short term. If you're trading long term, it can hide some of your mistakes. But if you're not doing really good solid proper analysis, whether it's fundamental and technical, then you're putting higher risk or putting your money at high risk. So at this point in time, I think it looks like it's going to go down a bit more.
Well, look, I don't have an issue with what he said in that it's short to medium term. So, thanks for calling for that one. And Flight Centre is a really interesting stock, but I mean, right now, I guess the point is that it's down, so you'd need to wait for some good, solid rules to get in if it starts moving up.
Okay, well, that's my comment. Yeah. Exactly. So we agree on one thing anyway.
Oh, look out. Our next email is from Len. Hi, Dale and Janine. My question this week is about GWA. I've followed this stock for years, but I always hesitated to invest in it as it's too volatile. But I finally did last month in June at $1.80. I took the punt as it hits the support level and it has always bounced nicely at this level. It was a gamble because it is still inside the downtrend, but I put a tight stop loss at $1.60. I am in profit at the moment and I moved the stop loss at cost. My question is there a good chance that its share price could run up and test its all-time high or come back down because it hasn't broken out of the downtrend? Again, thank you both for your hard work. Regards, Len.
What a good email from Len. But If you want to talk to us like Harry, make sure you pick up your phone right now and ring 92909988. That's 92909988. Janine, let's look at GWA.
Let's. And look, it is a messy chart. I'm going to warn you in advance. So you can see there, this huge volatility in this stock. Now, would you like to trade that?
Nope.
Next.
I go next.
Yeah. Okay, so I mean, in fairness to Len, he's identified a really strong level across here, and he's set the stop loss at 160.
Yep.
Now, if we go back and if we have a look,
he's still in a profit though.
Yeah. So look, I don't think he said that, did he?
Didn't he? Well, he said.
Oh yeah, there we go.
I took a punt and bought it.
He's bought it right at the bottom. See, look, here gives you a better bird's eye view.
Yep.
So this is the week of 24th of June. He bought in June.
Yep.
Right, and he's bought it $1.80. So the only way he could have bought is down here, right on the low. There's more.
He's got more intestinal fortitude than I have, that's for sure. I mean, that's like, geez, I would have been putting on 2 pairs of underpants for that one.
Yep, and you can see there it started moving up. And look, it really needs to get back above the high of this week's bar to show that it's going to keep going up. But it's just so volatile. Now, he could be right. There may be a bit of a rebound in the short term. At least he set a stop loss.
He has, which I love, but I mean,
that's one positive thing here. Whether he set the stop loss, let's just have a look at his percentage, because he doesn't say. And if we bring the bar down here, 160. So it's not too bad. It's a small stop loss that he set at 10%, around about there. But look, sometimes stocks can dip below these strong levels and then reverse and turn back up again. And that's always the risk, is that a stock it can be a challenge when setting a stop loss as to where to set it and not get taken out, and then the stock turns around and goes back up again. So he's given it a bit of room to move. But, generally we'd say that if a stock took out that such a strong level that it's more likely to keep going down, and it could go down long term. I mean, we're talking it could go back down below $1 if it does.
Yeah, as I said. Well, he took a gamble getting in, which he said it was high risk, but I think, the thing's in a downtrend. You don't trade things in a downtrend.
Well, there are points where they start turning back up again.
They do, but what are they? That's the point.
Right.
And where he bought definitely wasn't one of those points.
Yeah. True.
So, well, as I said, he's got more intestinal fortitude than I am. So,
okay. Well, it looks like we have another caller on the line. Good evening and welcome to the Australian Stock Market Show. You have Dale and Janine. Who have I got there, please?
Karen from
Karen,
Lower Hunter.
Lower Hunter Valley. Oh, is
correct?
Did you guys get flooded?
Not where I am, no.
Oh, fantastic! I'm glad to hear that. And how are you?
But not far from me, did.
Oh gosh, that must have been frightening at the time.
She would have been enjoying the red and the white wine, though.
I don't know. Look, Karen, you've got a question for us tonight. Would you mind sharing that with us, please?
Yeah, I was wondering if you could have a look at Credit Corp, CCP.
Sure. Yes. And what in particular interests you about Credit Corp?
One, it is in the financials, and I have bought it. Can't tell you what price I bought it at now.
Would you mind telling us what your intention was?
Long term.
Long term. Do you know when you bought it, or around about when you bought it?
I'll tell you. Actually, I can tell you in a minute. Yeah, I only bought it on the 21st of the 7th.
Okay.
At 23.29.
All right. Karen, thank you so much for calling in. We're going to have a look at that for you now.
Thank you.
Okay, looking at this, 2012. She bought it last week, right up at that peak of this sort of run right here that we're seeing here. So 1, 2, 3, 4, 5 weeks up, and just bought it there. So interesting. Too early for my book right at the moment for buying, because that really hasn't shown it stopped falling away, but it has had a nice strong run. And quite a few stocks have had 3, 4 weeks up or 5 weeks up. So I'm expecting a little bit of weakness on a lot of stocks to come back over the next 1 or 2 weeks, to come back for a week or two. And I think when we start seeing the downward move, we'll see whether these stocks have stopped falling and starting to rise again, or whether there's further falls to go. But I do like the stock though. I think it looks interesting, but I think, she did say long term, didn't she?
Yeah.
She did say long term, so that's the good thing about it. But I'd like to see the fundamentals on this. If it's got really good fundamentals, then I'm not so concerned about it. But I just think the entry was way too early. So I think you'd probably need to expect that it could come down a little bit over the next couple of weeks, and don't be too alarmed. But if it's a deeper move, then we'd make sure you've got a really good tight stop loss on this stock. Because that's a big move down back to where it was. If I put on a little tool here that Janine uses generally, if I put it from where you bought it back down to that low is nearly 20%. So I'd put a lot more tighter stop loss on it than that one. Did you want to add anything to what I'm talking about? Now you can talk.
I actually like...
You're going to cough again.
It must be your aftershave that you're using tonight.
It must be my aftershave that you don't like, or you're allergic to me. What do you reckon?
No, maybe both.
Okay.
All right, let's have a look here.
Yeah.
I think I really like looking at the monthly chart. I really like that support across there that we can see that it's coming in. It's reversed and could start moving back up, but it may only be temporary, like you're alluding to. And that's the challenge with not confirming that the low's in.
Yeah, as I said, if because it's long term, if the fundamentals are supporting it, then it's not so bad. But short term, you're going to experience some weakness. So just be careful a little bit over the next few weeks, but make sure you do have a stop loss on it, because if it does go down, it may go down below that low that I mentioned, which is a 20% from where you bought it on, and that's probably getting a bit too much from there. But anyway, thank you for calling. And if you want to be like our callers, then just please give us a call on 92909988. We will be taking more calls after our main topic later on. So if you're not ready yet, make sure you get your phone ready for after our main topic. But we do need to get into our next email, and this next email is from Amy and Sterling, and they say, "Hi Dale and Janine, regarding Polynovo, purchased on the 30th of June after confirming its low on the 2nd of May. It's had a recent pullback. Would like to add to our position. We're only using limited capital. Would like to hold for 12 months until it triggers us to sell. Love your show. Watch it on the weekly. Kind regards, Amy and Sterling."
Interesting.
It is interesting.
It's all about the adding to positions, which you like to talk about, don't you?
Yeah, but I mean, I do like to talk about that. And the thing is people add to positions, but when they do it, most of them they increase their risk dramatically, because they just think, well, the stock's going up and it's come back a little bit, I'll buy more of it.
Get greedy, is that what
and
you're
they
saying?
get greedy, and they don't understand that buying those second positions can put you in a lot more risk, and so they do it generally at the wrong time. So I'm not necessarily a fan of that. Now they're saying they're trading with limited capital, and so that's fine. I don't have a problem with this at the moment, but as long as you've got a good stop loss on, it's okay at the moment. But
I mean, I like the fact that it's held above $1.
Yeah,
that's
I like
really
the
important. And it's coming back this week, but if it trades back above that high there, that recent high, then it could go up quite well.
Yeah, it could go quite well. It could do really, really well. And the jury's out about how far it's going to go. I'd need to do a little more work on it, but it looks like a good trade. I think they've done well.
But I wouldn't, at the same time, you wouldn't fall in love with that though and just hang on to it regardless of what it does.
And I wouldn't be putting all my money in it either. I mean, when you're on limited capital, it's really hard, because it's like you break rules that we would normally do, because we wouldn't normally invest more than 2% of our, or put any more than 2% of any of our capital at risk in any one trade. Now people go, how do you do that? And well, if we do that, then we have to be wrong 90 times to lose all our money or something like that. It's massive, but often people break that rule, especially when you don't have a lot of capital. You're going to break that rule. But generally what I talk about in my book is having like 5 small positions. If you've got $5,000, that's 5 $1,000 positions. And most people can do that. Don't try and keep adding to some positions just because you've made some money on it, because you're probably increasing your risk. I'd rather diversify across a few good stocks, and some of the bigger stocks too, not necessarily small stocks, because often people also go, well, this stock's only around $1, or it's cheap, so I'll buy that because I can buy more $1 stocks than I can a $100 stock. Well, that's wrong thinking completely. It's about the quality of the stock. And
that's a real trap, isn't it?
It is a real trap, because it's not about how many shares you own. And a lot of people don't think, if you buy one $100 share and a $101 share, and they both go up 10%, how much did you make?
Same.
It's exactly the same, but people don't think of it that way. But the $100 share has got more chance of going 10% than the $1 share.
Like a Commonwealth Bank.
Yeah, like a Commonwealth Bank. And people don't think that. They think, it's only $1. It's only got to go up 10 cents and it's done 10%. Well, no, that's not how you think either.
Yeah.
Because the $100 stock is there because it's got better management, better processes, better profits, better all sorts of other things. So, but if they both give a signal to buy...
It's not necessarily like the $1 stock and can't go more, because often they
correct.
can.
Yes.
But it's more about the fact that are you more likely to walk away with the money on the $100 stock or the $1 stock?
Well, I'd be buying a $100 stock every time, you know, because as we see every single week, we're seeing a lot of stocks that get thrown up at us by people when they're buying these small stocks around $1 or under $1. A lot of them are getting slammed at some stage. They buy them, they go up a bit, and then they worry about them because they go down and they go, I don't know where to get out.
Yeah, yeah.
And you need much higher skill level and knowledge level to trade those stocks under $1. But I do like the trade. I think it's done really well. I make sure you've got a stop loss on it. I think the entry was really, really good, and they're going to trade it. Trade it till it tells you to get out of it, which is exactly what they said.
Yeah,
and,
great.
But the plan's 12 months. I think Amy and Sterling done a great job.
Okay,
Congratulations.
excellent. They'll be happy with
Gold
that.
star, pat on the back, elephant stamp, all the other things to go with it. Boom, plum, ching. Okay.
Lovely.
All right, well, it's time we actually get into our main topic for tonight. As we mentioned on last week's show, we intended to share our thoughts on the Australian banks. Now, an understanding of what is happening with the bank is vitally important for all investors to know, because I strongly suspect most of our viewers' portfolios will contain at least one bank or indeed a stock in the financial sector.
So true, Dale. I'm so excited that we're covering one of my favourite subjects, and tonight will be especially interesting as we'll include our thoughts on the proposed takeover of Suncorp's banking arm by ANZ. I also think it's important that we take a look at how each of the major banks is positioned in the industry against peers. Now, before we get into this, I have a little quote for you. Banks are to the economy what the heart is to the human body. They cycle necessary capital through the whole, and they are barely noticed until pressure, necessity or crisis. This is from author Hendrith Smith, and I pulled that one out of the hat. How did you like it?
You certainly pulled that out from somewhere, Janine. And I have to agree that a sophisticated society simply just can't exist without banks and a robust financial system. But that in itself is also the big issue that I have with banks and our financial system. But maybe I'm going to hold my thoughts on that for another day, Janine.
That's all we need. You on your soapbox.
Me?
Yeah.
If you missed last week's show, you would have definitely needed to take a look, because you were quite passionate about the ANZ takeover last week and got on your soapbox. So let me ask you, are you going to contain yourself tonight?
Well, actually, I was holding myself back so as not to cough. Unfortunately, I'm a lot better this week, and so I'm giving you, I'm not going to give you any guarantees. You might kick me under the table for that. I just wonder how many of you get frustrated by the number of Australian companies that have had their wings clipped because of competition issues, and then we all have to sit back and watch good Australian companies get taken over by a much bigger global peer and their profits go offshore.
You don't like takeovers, do you?
You really do get me, don't you?
I get you every single week. Sometimes I even agree with you, like I do on the subject of takeovers.
See, I knew it. Now, the only exception is when a takeover helps our homegrown companies get bigger. So many times I've done the analysis on a stock being taken over, and there's good upside potential well above the offer price.
Yeah, I know how this annoys you, Janine. However, we have digressed from tonight's topic, so perhaps we can get into more detail about takeovers as a topic for another night. So let us know if you'd like to learn more about this by commenting below in the comment section of this week's video. But let's get back to the banks, Janine.
That is a great idea. Okay, if you have super or pretty much any managed fund, it's a pretty good bet that some of your money is likely to be invested in banks. If you have investments outside of your superannuation, then it's also highly likely that at some point you will probably buy at least one bank and will generally hold at least one financial stock in your portfolio. Therefore, you'll need to know the best times to buy and sell.
Okay, so before we get into that, Janine, so everyone knows how big and how important the banks are to our market, can we take a look at the weighting that each of the major banks have in the Australian market?
All right.
Okay. All right, okay, so this is, you're going to be looking at that now?
I'm looking at you.
You're looking at me. So let's look at the weightings.
Let's look at the screen.
Let's look at the screen.
Okay, now we can see there that we've got the big four banks in there. Now I'll just click on this so we can see that there clearly. Their relative size to each other, you can see there, and some of the basic fundamentals. It's interesting to note that last week the market was valued at around $2.5 trillion.
Jeez.
If we simply add up the market capitalisation of the big four banks. We know that the big four are around 16% of the total market. We also know that ANZ is less than 40% of the size of CBA. So adding an asset to ANZ like Suncorp's banking arm that has been valued at around almost $5 billion is not really going to change things too much. If we work to the right, dividend yields are comparable except for ANZ's dividend, which appears high temporarily as the stock price has experienced high volatility to the downside. But remember, chasing a stock just for the dividend yields because they can change is not a good plan. The final point is about earnings growth. Current forecasts from Morningstar on the back of significant gains in 2021 that were distorted by the slowdown in 2020. So CBA and NAB, with a 2-year average of around 8%, do currently appear better placed for growth, and CBA is often our preferred bank. However, I'm watching ANZ as the comeback kid and Westpac with interest because they may have been oversold.
Wow, that's probably all we need to say about the fundamentals of the big four for now. Now, looking outside of this to say all Australian banks, according to the RBA, Sun is ranked at around 9 by market capitalisation, followed by Bankwest, which is the 10th bank in Australia by value, and I might add is actually owned by CBA. So it's no wonder that CBA is the biggest bank in Australia by a literal country mile.
Surprisingly, I read somewhere online that there are 14 foreign-owned banks with consent to maintain a representative office in Australia.
Why is that a surprise? Is it surprising that you read it, or surprising how many they are?
Yeah, surprising how many there are. After all, how many banks do we need to access anyway? Surely we have more than enough. And every time a fifth pillar tries to establish itself, something goes wrong. We've had overseas banks come in and try, and Australian borrowers have paid the price. There has to be a trade-off between the integrity of our banking system and competition, so perhaps all of this weighs in ANZ's favour.
Oh, I'm sure you're right there, perhaps, but what we know is that ANZ has a number of regulatory hurdles to overcome, including the ACCC, and in the past the ACCC has been a big stumbling block for banks when they have attempted to grow by acquisition. So let me ask you, Janine, can you answer without getting on your soapbox, do you believe the deal will proceed?
The short answer is yes, and it should. I do not see this deal having a significant impact on competition to be blocked. ANZ gains a greater exposure to the Queensland property market and increases its loan book by around $48 billion, along with all the cash deposits too. And this is also good for ANZ.
Well, all right. You heard it straight from the horse's mouth, hey?
Horse's mouth? Just remember, I prefer carrots to apples, and I like to be let loose in the paddock every so often. Otherwise, we're definitely going to have words.
She's champing at the bit again, guys. I didn't mean it like that. I meant you. Look, I think I better stop before I put my foot in my mouth again. I tell you what.
Oh, before I kick you under the table.
I know. In all seriousness, I'm excited about this $4.9 billion deal as it allows Suncorp to focus on its core business, which is insurance, and that's got to be good for shareholders. Now, it's also interesting to consider the size, or should I say the value, of the banking business that Suncorp will divest to ANZ and compare that to Suncorp's current market capitalisation, which is around $14 billion. Now, what will remain is still a really good-sized company, and Suncorp has indicated the proceeds of the sale will be returned to shareholders, which is very good in the short term because the share price has not given long-term holders really much joy. But long term, the story is a little different, as the deal will mean Suncorp is likely to be outside of the top 50 stocks on the market. So it will be interesting to see how this impacts the share price. Now, Janine, I know you're excited about this topic, so is there anything else that we can look at to help everyone watching in the time that we have left?
There is always more. One final comment though, ANZ have made a lot of decisions in the past that have worked against them, including their move into Asia, which they're still unwinding from. And it's important to consider that the Queensland market can be highly cyclical and real estate can also be down for longer than some states following correction. But that's something that we can chat about down the track. We hope ANZ got it right with this one, but as we always say, only time will tell.
Okay. Now, I'm sure you have some charts because you always have some charts. So let's go and take a look at a graph of the banks to understand more clearly what's happening and which banks are our best picks. As I know, everyone wants to know your preferred bank right now. So let's open up the charts. Hey, Janine.
Let's. All right. Now, here I've got ANZ as the first bank, just out of, preferred. My preferred pick. So ANZ at the moment is the one that's been down the most for the year. So we saw that was down around 17% for the year, from January to where it was trading at the close last week. Now, there is a level down here which it could come back to. There's always a risk of it going lower. But at the moment, I'm more thinking on the upside in the short term. However, with the deal that's being undertaken at the moment, there's a chance that this may actually hold the price more steady, and just it may end up being more stable, but it may not take off. As if Commonwealth Bank took off, and other banks take off at the same time, it's possible that the deal might actually slow that down a little bit for ANZ by comparison.
Oh, well, because it's a bank, it's going to take a while to bed in, isn't it?
Yeah.
Generally, when banks merge, we see that the bank taking it over, it has a sluggish period afterwards because they're trying to absorb it all. Obviously, they've got different systems and a whole range of other things. There's obviously economies of scale, but I wouldn't expect ANZ to be breakneck speed in the coming year or two.
Yeah, but look, I think it'll still be a good growth opportunity.
It's not going to, but I don't think it's just going to shoot off like a rocket.
Yeah, I agree.
So I think it'll be a nice little plotter, but it is one of those stocks that it's not the same as a Commonwealth Bank in terms of long-term steady growth. As you can see on the chart, it's pretty sideways a lot of times too.
I know. I mean, if there were more opportunities for our banks to grow,
there should be
here, then there could be another Commonwealth Bank here.
I think we should have a fifth pillar, but that's a whole nother story too.
Well, they've tried so many times.
It's because the big poor bank want to keep it to themselves. It's like, let's take my own ball.
No, but to me, it's more about when it happens, because it happens towards the end of a big cycle that comes in, and then all of a sudden we get a big correction on the market.
What else we got? We got Westpac, my favourite bank because I used to work for them.
Yeah, so ANZ and Westpac I've grouped together simply because they actually fell the most. So these were the two banks that fell around 30% as part of this recent decline, and you can see it there. Now, Westpac's actually fallen to a level that I'm really, quite interested in seeing it recover from. So I'm really also watching this. As I said, I'm quite interested in Westpac as well at the moment, even though the earnings are not as strong as what the other two banks are. So if we move from here, then we can perhaps, did you want to make any comment on Westpac? Or did you want to have a look at the long-term picture of it?
No, it's used to be a real sort of darling of the market, this stock. It used to do really well pre sort of 2000 GFC sort of thing prior to that. But since the GFC, it's been a real all over the place, hasn't it? It has been really, really strong. But it used to be a great bank from terms of growth. So, and I do like it. I mean, obviously I used to work there, so obviously I did like it. But to me at the moment, I think it's going to be okay. I think it'll be okay.
Okay.
I think I do like it.
All right, so that's Westpac. And then we've got NAB. NAB historically was the bottom end of the barrel, wasn't it?
Yeah.
So we used to always think that, NAB was just going to go nowhere. I mean, historically it's just gone sideways since the 90s and done nothing. And now is its big chance because it's just been so strong, there's a possibility that it could track up and head all the way towards the all-time high over time.
Absolutely. But it is looking much, much better. That move up since 2020 has been really good on NAB, and it's really sort of, and historically, as you said, it's been out of the big four, it's always been the worst. But I think it's one of the better ones of the big four in the last year or so.
Yep, so question mark could be a turnaround in NAB long term, so we'll just wait and see there for NAB. Look, I just wanted to have a look at the weekly chart just briefly. We can see there the recent fall's about 24.6%.
Yep.
I think that, given that it's only fallen 24.6%, you'd have to say that, and it's fallen to a level that looks like there's really strong support across there. But we still like to see a retest of these rises when they happen. So Ideally, I'd like to see it pull back to sort of $27, $28, see that occur, and then for it to move up from there, so we know with a bit more confidence.
That's what I was talking about on my market report
Okay.
yesterday. You know, that
fantastic.
I think the market's been up 4 or 5 weeks now, even though it's been sort of sideways and up.
It's not clear. It wasn't a clear rise, was it?
No, it's definitely not a clear rise. CBA, the best
CBA,
bank, best
yep.
of the big four generally, but look at that topping pattern on it. It's really sideways, isn't it?
Yeah, now, look, we talked about that situation with that gentleman who was looking at a stock and it took out some important lows. Now, Commonwealth Bank just actually got... now, to me, that's not natural for Commonwealth Bank.
No, that's definitely
so that's
not natural.
definitely, to me, I don't want to say it, the word, because that's...
Short sellers, hedge funds.
Yeah, but look, I mean, it's more about the fact that how can that sort of abnormality occur on our market that's supposed to have, you know, be a fair market? If you see these sort of moves on a big bank like that, and we're not in the middle of a financial crisis, because those sort of things happen in a cyclical fashion, and we're not in that time for that to occur. So looking at this pullback, we've now seen a bit of a rebound. But it's possible, because the level I would have liked to have seen Commonwealth Bank come back to was closer to this $83, $84 mark. So will it come back to that level? A lot of people will probably say, well, given it's risen so strongly over the last few weeks, probably no. But you're still saying that the market could fall lower.
As I was saying yesterday, I think the pendulum has swung to being slightly more positive. But interestingly, I've had comments of people from yesterday's report, some people saying I'm more bearish and some people saying I'm more bullish on the same report.
It depends on their own
I'm
filters.
confusing people.
No, so are you hedging your bets both ways?
No, I'm just saying the market could go up or could go down, but you have to look at it that way. So at the moment, I think the pendulum is swinging for it to be a little bit more bullish.
Yeah, but so what you're saying is it doesn't really matter what the market does.
Doesn't
it's
matter.
What you do.
Yeah, as long as you understand what you're doing, and it doesn't matter. I mean, you see all this news out there in the marketplace about doom and gloom. And to me, like I was saying last week on my market report, when everything's doom and gloom, that means buy. That's a Buffett thing, you know. And you and me know that when everything's so doomy and gloomy, we know it doesn't last too long. And then if you buy, it goes up, you know. Because if everybody was going to panic, they'd already be panicking by now and out of the marketplace, but they're not. So what's holding our market there? And so CBA looks really, really good. I think some of the stocks will start to come back a little bit.
I think it's a wait and see to determine whether the interest rates are going to hike again.
Well,
That's
we've got
what
reporting season coming up too in a few weeks. So, you know, August is reporting season for all these banks, isn't it? All the banks are going to report in August, aren't they?
All companies report twice a year, the main reports are.
Yeah. So it remains to be seen whether we're getting good reports, and if we do, the market will go up. If we get bad reports, it'll probably go down.
Okay, so look, I mean, CBA has the potential to drop down to this level, as I said, but it may just go sideways for a little while and come back to test as you're expecting the market to do. And look, I guess we're on to the final chart that I've got for tonight, which is Suncorp, given that it's potentially offloading that.
I'm more excited about this stock long term. Because I think it's getting back to its knitting, which is insurance, and it's really good at insurance. You know, banking was sort of like, you know, you're hedging your bets a little bit, you're looking sideways and diversifying yourself, and it's competing against big banks, you know, paying more for its money, and the cost would be higher for running a second-tier bank like that than a big four in terms of relative terms.
Well, it was a way for them to attract extra customers to sell more insurance,
but
wasn't it?
I would watch this one long term. I'm excited about this and getting rid of that banking. Because we've seen other companies, you know, like when, who was it that got rid of...
But insurance has really had a rough time.
It has, but it's a
really
big money-making machine too. I mean, your insurance bill just keeps going up, doesn't it?
True.
Mine did.
Yeah, they
My
don't
house
hold
insurance
back,
went up like 20 or 30% this year.
Yeah, that's right. Make sure that if you get an insurance bill or they're asking for more money, always make sure that you contact them to see if you can get that price down. It's better that money in your pocket. That's something that you do, isn't it?
Money tips from the TV.
Money
saving tips from the TV.
The nightly news.
Are you going to tell people to wash their toilet paper too?
No.
Okay.
Someone told me actually there was a bit of a run on toilet paper, that someone was saying that they couldn't get the toilet paper that they wanted. Is that happening again?
That's a bit of crap, isn't it?
Oh, geez, that was a sad joke.
Suncorp. Well, you brought it up. So Suncorp, what are we thinking about now?
All right.
So are you liking this stock, or are you thinking it's going to be sideways for a while?
Look, generally when a company's being taken over, the share price goes up, but this is not a full takeover. This is partial.
Takeover, yep.
So, I'd need to see Suncorp head back through this high in May 2022 before I would even entertain it, because it could fall lower. There's always a possibility for that, but it just looks really nice where it's sitting at the moment, doesn't it?
Did you read any of the documents about the takeover?
I did read some of them.
When's it due to take?
I can't recall exactly the date of that.
Months? Weeks?
It was more, I was reading more the action and the process and what was going to happen with shareholders and whether they would benefit rather than the exact date, because the problem is that you don't have approval yet, so there's a whole lot of approvals that has to go through.
That's what I was asking, is once the approvals happen and everything's gone on, then I think it'll take some of the rubber bands off that holding Suncorp back.
Yeah.
I think it'll do okay after that because people will want it, but right now we do like the financial sector. Your preferred bank is either Westpac or ANZ.
In terms of a growth opportunity, but for more stable, if you're looking for something more stable, it's more about Commonwealth Bank or NAB, but just not right now while they're just testing.
But we do like the banks anyway. Well, that's it for our topic for tonight. I do hope you enjoyed it. Now, before we get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning question. Now's the time to get your phone out and start dialing. The number you need to call is 0392909988. That's 03 for Melbourne, 92909988. So make sure you pick up your phone and get dialing now.
While you call us, we'll get into answering the next question, so call now. Now we have a question from Nicola. Hi Dale and Janine, another great show. Just after your thoughts on Altium. I don't own the stock, but I think it's looking good, maybe a bit early. Many thanks, Nicola. Fantastic to see another lady writing into the show. Well done.
I know.
So let's have a look at the charts.
The ladies ringing up. Hopefully some more ladies ring up the show. And
that's wonderful.
Ladies sending an email. So Altium, this is one I've been watching too.
All right.
It's quite volatile.
Yeah, looking at this, I just don't like this
it's a big
pattern that's happening here. It's just messy.
It is.
This is really a short-term proposition, in my opinion, if you were looking to trade this thing, and it's higher risk.
It is higher risk. To me, this sort of looks like a lot more of a bigger topping pattern, doesn't it? It's sort of, we've had a lot of stocks that are 1, 2, 3, 4. Looking at this, have a look at this. This is what I was talking about yesterday on my market wrap. Open and close together. That's not bullish. Okay, that's indecision. Opened, tried to trade down, came up, closed on its high. Opened up higher, but traded down, so it closed lower the next week. Opened higher, traded up on its high. The next week, it opened, tried to get up, came back, closed lower than it opened, then it gapped up. Again, not a strong bar through. It tried to go up and down here, and this week currently it's closing lower than opens. So all these bars, the stuff we talk about in our course, like in our trade, even in our cheapest cheap trading mentor course.
Just to understand it.
Under $2,000. It's so easy. When you start understanding what the bars mean, it's showing you, this is telling me there's still a lot of indecision in Altium at the moment, that the market doesn't necessarily, it's not strongly pushing it anywhere. And if we look at, I talked about volume yesterday on the All Ords. The volume on Monday and Tuesday last week was really low. The volume on Thursday, Friday was high. But you're still getting this mixture of this indecision on the market, and that's what I'm seeing here. I would expect this stock to come down for at least 1 or 2 weeks fairly soon, in the next week or two.
I actually see that I feel like it wants to get up to $33, $34, somewhere around there, but I'm just not convinced that it's going to go too much further than that without a decent pullback, just because of how this stock trades in terms of volatility. You can see that it takes off and then it comes back significantly, and it does that, this repeated sort of, and that's why it's really a short-term proposition, because you can't be sure that it's actually got out of this yet. It's just up and down. It's almost like a roller coaster, isn't it?
Yeah, well, that's what I was sort of getting at. It's the mood of the market determines the strength of a move, and where the mood of the market right now is indecisive. And that's where you really do need to know what you're doing before, especially buying stocks like this at the moment.
Great advice.
But anyway, if you do want to talk to Janine and I, remember to pick up your phone, 92909988. Janine's really seriously keen to hear your voice and to answer your questions. But let's get into the next email. And the next email is from Alex, who says, "Hey Dale and Janine and team. Love the show. I've learnt a lot. Much appreciated. Thank you. And also read both your books. I have a question for you guys. The stock is Kronos Australian, and I purchased the stock at 30 cents in January. The stock went up and then slipped away over the next few months and I decided to cut my losses short. Now, I sold on Friday, the 22nd of July in the afternoon before the market closed. When the market opened Monday morning, which was yesterday morning, the 25th of July, Kronos had jumped 40%. Why had this happened? Is there any indication that could have told me to stay in the stock, for example, volume entering, or was I just unlucky? Thanks, Alex.
Yeah.
Love the question.
First of all, I'd like to address the elephant in the room.
You're calling me fat.
I'm looking at you.
You're looking straight at me and saying an elephant.
Okay, what we're talking about here is the fact that
Yep.
Alex mentioned about whether he's unlucky.
Yep.
Because there's no such thing as that in the stock market. So you make a decision to go into a stock, you set a stop loss. The rest is up to the market. So what you're doing by even putting that into your mind is affecting your psychology and could be affecting future trading decisions. And that's one of the most important things, takeouts from your email that I could potentially share with you and hopefully help you, is to just get that thought right out of your head right now, because you've always told people as well, the only thing you can control is what you do when you buy and what you do when you sell.
Yeah, but it is. It's the Arnold Palmer comment is, the more I practice, the luckier I get. And it's the same with anything. It's the more you practice. Now, buying this stock where he did was the wrong place. And so he's not unlucky. For you and me, it goes back to process. It's always about structure and process. And it's like your quote at the start. It's about do the technique class. His technique on this is pretty terrible. But could he have known about something happening? Well, why it went up yesterday was they came out with the announcements of their reports and stuff like that. So
it's a cannabis stock, isn't it?
Yeah, but the day before, last week, if we quickly look at the chart, this is last week's bar. Very strong bar closing on its high, and he sold then. And that would have been to me, if he understood some techniques, that would have been to me, just hold it and manage myself out of it.
But see, I don't agree with you there, because I just look at this stock and it had fallen 41%.
You don't have to agree with me.
No, so I think that he's actually, from his buy price, so I actually think that there was heaps of reasons there to get out of it, and maybe his exit could have been a lot tighter.
There are dozens of reasons he should have not been in that stock.
In that case, just because of the risk and the volatility of the stock.
We're saying the same thing. He doesn't
got
have
another
rules on
caller
it,
on
so
the
that's
line.
why he lost. Anyway, we do have a caller on the line, Janine, which I do need to get to. Welcome to the Australian Stock Market Show. You're on with Dale and Janine. Who have I got on the line?
G'day Dale, g'day Janine. My name's Craig, ringing from Iluka, New South Wales 2466. Thanks for taking me call.
My pleasure. Thanks for ringing in or being brave enough to come into the show. You've got a question for us?
The Gurus, yeah. I'm just wondering what stock or sector is most leveraged to their profit base or their margin.
I'm not quite understanding the question.
I mean,
Do you
I guess
understand it, Janine?
which sector tends to be more leveraged?
Yep.
Because
you were talking about banks, and you were talking about, like, for example, BHP, Rio Tinto. Who invests the least to get more gains out of?
That's a very tough question.
That is a very tough question. You're talking about investors, or are you talking about the companies themselves?
No, me. I'm talking about me, mate.
So investing the least to get the most amount of gain. Generally, when you're doing that, just to answer the question, people that do that generally take the too high a risk, and generally it's a balance between too much and not enough. And I think it's
because we started off talking about which sectors, right? Are actually
well, like for example, if I had $1,000 and I stuck it in a bank, or I had $1,000 and stuck it in, let's say Rio Tinto, which, like generally speaking, which would I benefit?
So
from more?
Now we're getting to
the crux of it. Yep.
Gotcha.
Yes, thanks, Janine.
That's okay, mate.
We knew we'd get there in the end, mate. We absolutely would get there in the end. Janine and I just love asking questions, and eventually we'll find out exactly what the answer is. But I think we can do that. Thanks for ringing in, Craig. We'll answer that question now.
So can someone make more out of a stock like BHP or a bank?
Generally a BHP.
Why is that?
because it's more volatile. It's about volatility in terms of the average move that stocks have. So BHP, Rio, Fortescue are all more higher volatile stocks, where Telstra's a real low volatile stock. And it's really easy to pick those up when you go and look at like margin lending, or you go and look at CFDs. The amount of leverage that they allow people to have on those will show you which ones are more leveraged and which ones not. The more leveraging they allow, the less volatile.
Okay.
That's really what it's about. So, but great question, Craig.
Great question.
I'd go for BHP. Yeah.
All right. Looks like we have another caller on the line.
Fantastic.
Welcome to the Australian Stock Market Show. You have Dale and Janine. Who have I got on the line, please?
Matt.
Oh, g'day, Matt. How are you?
Not too bad. How are
That's
you guys?
good. Good, thank you. And what's your question for us tonight?
I've just got a question on, last week you guys talked about shorting, and I know, Dale, you're not a big fan of them, but I have read both your books and I am uneducated. Do plan on doing your diploma course soon, once my missus finishes uni. But it got me thinking about shorting. If you guys talk about a stop loss when you're coming down, and you know when you get out of it, would the same signals give you an entry point to short the stock? Does that make sense?
Good question.
We
isn't
had
it?
this question already.
We have when?
Just recently.
I think that's a brilliant question by Matt.
I had this question recently, yeah.
Did you?
And it may have actually been Matt that asked it.
Yes, it was me.
It was
You
you.
called me the other day talking about the diploma, but I said I'd call in tonight.
You're awesome.
Look, hey, you two are old friends. What are you buying, flowers and chocolates as well?
No, look,
Matt's married, so are you.
Matt's great. Look, Matt, I really admired what you're doing, and the fact that your wife is doing her study, and so you're putting her study first and getting that finished before you decide to get stuck into the course and complete the course. So, my hat was off for you in that regard, and well done. But your question on shorting, absolutely. Like the issue is that when you're using technical analysis, there's a point where the analysis tells you it's time to get out and the stock could continue falling. Now, when we had this conversation about some of the content of the course, because there's parts of the course which actually tell you how far the stock's likely to fall. So at the point where the exit signal comes, then it's possible that you could get into a short trade and then profit from the downside based on how far you're expecting the stock to fall. But of course, then you've got to have a rule in reverse to get back out again if it turns around and goes back up. Now, the real challenge, and this is where the novices don't really understand this, is, and a lot of people try to get into shorting before they've understood how to trade long first, because it's all about up in stairs and down in elevators. So if it goes down much faster, sure, you can make more money, but the problem is that if a stock, what often new people to the market often do is they try to buy or sell stock short, and then the stock is in a long-term uptrend or something. And so then it just goes down, they try to short it, and then they get taken out of it really quick, thinking, oh, this is not working. But it can work really well if used at the right time. And this is where you've got to bring in all of the analysis to make the decision, not just thinking, okay, there's an exit rule there and the stock could fall, now I'm going to short it, if that makes sense.
Yeah, I've got no intention of actually doing it, but I just was curious on the topic.
Yeah,
Excellent.
I actually recorded a podcast Friday on shorting the market, which is probably going to be out in the next 2-3 weeks. I did that, but all too often people short the market when it's going up, or the stock when it's going up, and they think, I think it's gone too high, it's going to go short. It's going to go down, so I'll short it now, whereas that's the worst time to short a market. And shorting you can only do on leverage as well. You can't, whereas you can buy a stock with cash, you can't short.
Or a stock's been trading up really strongly is what you're saying, and they try to guess that it's going to turn and go down.
Correct, that's what they're doing, and that's when they start shorting, and that's fraught with danger as well. So, but unless you can trade long or
at least Matt had the right idea. He was thinking, what could I identify that could potentially say that the stock was more likely to keep falling?
And it makes sense, stop, reverse, reverse. Whatever you stop one trade, reverse it into another trade down the other direction. Makes sense, but you need to have really good education. But don't tell me you're not educated, mate. You've read 2 books.
Okay.
And they're really good books. If you're enjoying the show, just give us a really big thumbs up right now.
All right, now we have a question from Jacob. Hi Janine and Dale, I hope that you're both doing well. My question has nothing to do with any stock in particular. It's about hyped up stocks and short selling. Something that I've noticed after observing the market for a couple of years is that hyped up stocks tend to get hammered by short selling more than boring stocks. For example, coal stocks, which institutional investors won't touch, have trended really well over the last 1.5 years. But stocks which are touted as being the next big thing get traded up and then slam back down just as quickly as they went up. Is this a new thing in the market, or is it something that has always been there? Kind regards, Jacob.
Okay.
Really great question.
Jacob, just think about it. Think about who's ramping it both ways. That's the answer to the question, isn't it? Because it's not the big stocks. It's not your big blue chip stocks that are this is probably more the mid cap or the lower cap stocks that you see chat forums and things like that in other places. They ramp them up and then they push them down. They ramp them up and they push them down because they know the greater percentage of people on these stocks are uneducated, and those people that are doing it are basically raping and pillaging is pretty much, to keep it mildly. So that's my answer.
All right.
You want to add to anything? No? That's
No.
good. That's very much. Okay, finished on your soapbox? Okay.
I was just going to ask you the same thing.
Cool. All right, well, that's our thoughts on short selling, etc. But I did want to thank everyone who's taken the time to comment in our YouTube comments or has taken the time to email us. We really do appreciate your feedback.
You have been asking us questions, and each week we ask you for your thoughts. Last week we asked, what is your preferred exit strategy? Not many people shared their answer, but we had a great response from Sam, who said, I like the exit strategy where I take the capital off the table. Any gain after that is a bonus and capital is preserved. That was a great one.
That was a good one.
We do have another question for you this week. Let's see how you go. My question is, how many stocks do you currently own in your portfolio and why that many? So come on, get typing and write your answer below this video in the comments section. If you are listening to us on a podcast, you can still send us an email with your answer. Before you go, give us a 5-star rating and review on whatever podcasting app that you're using.
Yeah, absolutely. Now, if you have enjoyed tonight's show, make sure you give the team a big thumbs up right now. That means also you'd like to click that like button underneath the video and let us know that you've really enjoyed the show. The team like more likes.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up that phone and give us a call, as we'd love to chat with you. If you are not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and just remember to include Wealth Within Live in that subject line.
Fantastic. We really appreciate your support to our show, and you can show yours by subscribing to our channel by hitting that subscribe button now.
Well, that is it for tonight's show. We do hope you've enjoyed what we presented tonight. We've so enjoyed receiving all of your emails and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we do hope you have a fantastic week. But for now, goodbye, good luck and good trading. Give us a big thumbs up.
Bye for now.